Okay, so we're getting to the last bit of this series. So this is the break-even analysis. Everything that we've been working on is building up to this sheet right here. So you don't have to go in and change or manipulate anything. This is just a read-only view. And this is for internal use, really, for yourself and your business to understand where you are financially. So the break-even analysis is just that. It tells you the break-even point of where your revenues equal your costs, and hopefully after that point your revenues will exceed your costs and you'll start making some profits. So in the beginning, for any company, any startup, you're always going to have a lot of costs up front. You're going to have to invest money to earn money in the future. So you're going to see in the first few years that your costs are going to be, or your break even is going to be negative. So the way to read this, starting from the top, we have the revenues up here. Basically, this is pulling on all the different revenue streams that we've outlined in the prior sheets, and even the label is getting pulled. So if you update what the different revenue streams that you have, these will also update as well. So these are getting pulled, and you can calculate the total revenues for the year here. Fixed costs, these are all of your application development costs, your CapEx, expenditures, any big purchases. So these are also included. Everything that you noted down in that CapEx input tab is present here. Next are your variable costs. So these are your cost of goods sold or your direct costs. I'm going to include that in here, because in the other tab we refer to it as direct costs. So yeah, these are your COGS, your salaries and benefits, marketing expenses, and G&A, and I believe we refer to this as other expenses in the other tab. So that is total expenses. So these are your total expenses there. Oh my goodness, other expenses. I'm gonna have to update this. Okay. And then we have our total variable costs, which is summing all of those numbers up. We have depreciation and amortization. So depreciation is, as we discussed, it's the depreciating of CapEx purchase. So something that depreciates, it could be over a 3-year period. We're basically through wear and tear. It's just losing its value. And amortization is similar. I'm not too familiar with this, but I believe it's more of depreciating for something that's not a physical asset. It's like an intangible. So if you have intangibles like some sort of IP, trademark, copyright, I think things like that could be grouped into this bucket. But you can see I left it as black because I don't have any formulas for that. So this just calculates the sum of these. And then taxes, I left blank. I don't have a tab for taxes. For startups, though, taxes, you don't pay taxes until you become profitable. Also, if you're not making a profit, and that means, like, let's say you're earning revenue, but your costs are still exceeding your if your costs are exceeding your revenues, and you're not making any sort of profits, then you're not going to be taxed for that. And so a lot of times when companies start, instead of earning a profit, they'll keep putting their money back into the business so that way it's not taxable. So if you have just cash that's just sitting on your books, you're not doing anything with it, that's your profit. And if you're not investing it back in the business, it can be taxed. So to get around that, you can just incur that cost, keep putting your revenues back into the company, and you don't really have to incur taxes there. I don't know how taxes work in other countries, but in the US, that's the extent of my tax knowledge for companies. And so your break even, so the first year is going to be nothing. And then the revenues, these are just calculated by pulling on the numbers above. So you'll see this one gets calculated there. This one is the sum of all of these here. And then your ending is just taking the sum of all of these. So this number is a sum, but I have a negative in front, so that way it automatically gets subtracted out when you sum all of the numbers up top. So now if we scroll over, we can see, okay, so we're at negative 271,000. We keep scrolling, keep scrolling. It went up to 296,000. Let's see, it was going down slowly but surely. And now, okay, now we're positive. So somewhere between here, we flipped. So here we were negative, and then here we were positive. So between these 2 months, we hit our break even. September and October of 2021, those are our golden years. And if you want, you can create some sort of like chart or graph to graph out these points, so you can make it look really nice and pretty to see when the lines overlap and they cross. But you can chart these lines here, and it'll show you that to see when your business starts making money. So that is it for now. This is the first series. I do have some other spreadsheets I can talk through. Those are more about the other typical financial spreadsheets you'll come across. It's the balance sheet, the cash flow, and the income statements. These spreadsheets don't require any additional work. We've done all the upfront work here, but I'll include the videos of how to actually read them a little bit later, so everyone has some time to digest all of this information. You can build out your own, and then later we'll talk through the other financial spreadsheets. Even though we don't have to update them, I'll just walk through everybody on how to interpret them. Okay, well, I hope you got something out of this. If you have any questions, you can leave comments in the comment section below. You can also, I guess do that. Just leave some comments, and I'll try to get back to you. I hope this was helpful, and if it was, I can make more videos in the future on some other entrepreneur topics, some other things like around like funding and convertible notes, things of that nature. But okay,